Welcome everyone to a new video of ATFX. My name is Gonzalo Canete, and in this occasion, this video is about BlackRock. I'm recording this video few hours, day and a half before the presentation of the results from this company. That's why it's important, because we're gonna speculate with what could be the scenario after the presentation of earnings. And in order to do so, we're gonna review chronologically what was the last achievement of this company, the last strategies, the position of the company mainly on the industry, on the money management industry or asset management industry. What's the plans, the main challenge, how the company it is from a financial perspective in terms of debt, leverage, and so on. And we're gonna end the report obviously showing to you the fundamentals on numbers, which is the net income. We're gonna see a chart with the net income generated for the last few years, but also with the price projection. We're gonna see what is the main or the most probable scenario for the coming days in the case of this company, and what could be the attractive pricing levels to be or hold this company. Let me set the screen so we can go to straight the points. First of all, BlackRock has been sharing a modest price gains recently. So let's see, the EPS, the earnings per share, has been a little bit lower or flat than expected. It's also true, and it's related probably with the net income. If we take a look at the net income later, we will see that actually is flat. For the last 2-3 years, has been almost moving in the same range of incomes, and therefore the EPS, the earnings per share, the cash flow they share with the shareholders is getting flat recently. BlackRock is a strategic deal with company, with Global Infrastructure Partners, GIP. The acquisition of GIP is given to BlackRock very strong position in the industry of asset management, ETFs, and so on. All of these companies focus on what we call buy sides in the financial industry. 3 billion on cash, 12 million share deal to acquire GIP, the largest independent infrastructure manager with about 100 billions of assets under management. Is expected to accretive adjust earnings per share. The deal provides to BlackRock with a strong foothold on the 100 trillion infrastructure market. So therefore is a very strategic step to take control on the industry, or lead the industry in this case. Impressive assets growth and profitability. We're gonna take a look also in the growth, because if he's adhering another financial firms or another asset management firms, it's actually increasing the portfolio that they got under management. Let me set the whole screen with you. You will see BlackRock has grown assets under management to 10 trillions by 2021, driven by asset inflows and appreciation. In 2021, BlackRock generated over 19 billions in revenues and 17.5 billions in operational profit, resulting in $3 per share in net profit. And this is one of the key points we were mentioned that is not changing a lot. The shareholding profits, the earnings, the EPS has been around 38 from 36, 38. We're gonna take a look on that later. Despite market volatility on 2022, BlackRock earnings power remained strong at around $35 per share. That was the earnings, the dividends given to the investors, which is good. We're also gonna see later how they increase the percent of shareholding by public instead of the owners of the company, which is also good because it's a kind of gesture of democratization of the company. The company's balance sheet is pristine, with a flattish net debt load and enterprise valuation on over 6 times sales and 20 to 21 times earnings, which is again super strong in terms of I will say solvency risk. What's the probability? What is the chance that this company got financial troubles? So apparently, based on these numbers, it's really low, because the net debt is completely flat, and because the earnings that they're generating, it's actually they got 21 times more assets than the earnings. So seems to be really stable from a financial perspective. Expanding of ETF industry and BlackRock Aladdin platform. The ETF industry has been expanding. Also, we must mention in this report what is the situation with BlackRock, because it was the biggest one who was requesting an ETF on spot Bitcoin or Bitcoin spot, which is something like we were expecting and the industry was expecting. So for a very long time, and early this year, they received, after all, the permission from the SEC, from the authorities in the United States, to commercialize that ETF based on Bitcoin. So again, ETF industry is expected to reach a total addressable market of 25 trillions by 2030, in which case BlackRock is going to be the one who is leading this industry. Benefit BlackRock has a leading ETF provider under the eShares brand. BlackRock's Aladdin platform, which offers risk asset management and portfolio management features, has been growing its revenue at an annual rate of 12% over the past 3 years, faster than the core asset management business. So again, another tool provided by BlackRock that is growing on the industry and is, I would say, not monopolizing, because that will be illegal, but it's also true that considering the size that this financial firm is getting right now in the industry, is probably fighting super strongly other competitors right now. Aladdin has client retention rate of 98%, which seems to be good, because if that's the client retention, it means that most of the financial firms that are using Aladdin platform right now are happy with that. The total addressable market for investment platforms like Aladdin is currently evaluated in 12.5 billion, with Aladdin holding around 11% of the market share. So therefore, again, I was saying like it's a kind of quasi monopolistic structure, because it's getting so big in the industry, and the way that BlackRock and the platform are getting in comparison with another competitors is so strong. BlackRock's solid financial firm performance. BlackRock has delivered steady business performance over the past 5 years, with revenue growing of 14.2 billions in 2018 and 70.9 billions in trailing 12 months. And that means an exponential growth of 4.3%. So good numbers, a revenue that is growing but still is getting flat. We will see the net incomes at the end, and you will see what I mean. Earnings per share improved from $26.58 to $36.51 in the last few years, which is good, but not such impressive, considering that for the last 2-3 years has been almost flat. BlackRock also has reduced its share count from 161.90 millions in 2018 to 150.71 millions in the past 12 months, demonstrating a commitment to shareholders' returns. They are giving more part of the cake to public investors. Free cash flow has grown exponentially by 5.3%, from 2.9 billion in 2018 to 3.8 billion in the trailing 12 months. And now valuation and conclusion before we can go to the net income generating, plus also to the price projection, which is probably the key factor right now to analyze. After all, what the price and the market say, right? Valuation and conclusion. While BlackRock business fundamentals are strong, the current market, pay attention please, valuation suggests that the stock is slightly overvaluated, unfortunately. And actually, the target price they are giving to BlackRock, if you pay attention here, is they say they expect it to get an estimated price of $1,065 from now on to the coming 5 years. And we are not so far from that, so we should not expect a massive growth. And actually, the last maximum record from BlackRock was close to $1,000. So therefore, from now to 5 years, based on the estimations the market is giving to them, that the target price $1,065 is nothing, because we coming from $1,000 per share maximum top record achieved by BlackRock on the market. So based on a discount cash flow analysis with 10% growth rate and 20 times exit multiples, the stock price target in 5 years is estimated to be $1,065. Not so impressive. At the current share price, $815 right now, this will implicate 6% exponential growth over the next 5 years, which is slightly below the expectations from a marketing returns perspective. Therefore, the recommendation, and remember, this is not a direct recommendation, I'm just quoting mainly what the market is discounted. So do not take this as advice. And we always would like to remind you that if you are considering the idea to invest in financial market, you need to consult first with your financial advisor. But again, Probably most of the analysts are giving BlackRock in a hold position, which means not necessarily sell the shares if it's in your portfolio, but it's neither a case of buy immediately or urgently. More likely hold the position. Still, we're gonna give you our view based on the technical analysis more than this kind of report, so you will see what could be interesting. Now, net income, as I was saying, the net income you can see here clearly is getting flat for the last 3 years, and therefore, well, even we could include 2020 there. It's good because we have seen many companies dropping in between 2020 to 2021 in incomes and returns, earnings mainly. But in the case of BlackRock, has been resisting really flat, really strong the drop of the market. So it was doing well, but still it doesn't seem to be gone. Which, in the other hand, it's understandable if we consider that BlackRock is expanding the business. Anytime a big company is buying others, it's usually making the stocks more heavy on the market, because obviously they need to use the equity they got available to buy another companies, and it's always implicate a cost, a risk, but it's the price you need to pay for global expansion like they're doing. Now, finally, let's take a look to the charts. Let me share the whole screen so you will see clearly the levels. But I can see a clear evolution of a BlackRock +1. During the 2021, it was doing really well, and as you can see, was let me see if I can actually draw on this screen. As you can see, on 2021, between 2020 and 2022, it was reaching $1,000 per share. Now, that's why we believe that from a fundamental perspective, with a 6% of exponential growth for the coming 5 years, if the target is $1,035, $36, obviously, it doesn't seem too ambitious. But, however, we can consider that $135, even we could say 135 to 150, right? To make a kind of clear range of price, seems to be a clear resistance for BlackRock, and therefore a drop down, a pullback to $750 per share is probably one possible scenario. And in that case, at 750, you can see that there is a lot of supports at this level. All resistance becomes support. Now 750, therefore, is a good area for support, and therefore probably for new fresh entries on BlackRock in terms of quotation on the price. So if we see that actually the price is dropping, calm down, keep your blood cold, and then just wait for the right moment, because probably in the prices in the zone of $750 per share, we're gonna see again a nice push on the price, and eventually a new oxygen entering in the company. I think that's all. Let me just share with you my contact details. If you want to keep in touch, please contact me through the email. Leave me comments in this video if you want to request any particular topic to discuss, or you want me to research any particular topic. Let's finish this saying the evolution of Bitcoin is doing really well, and BlackRock is one of the biggest companies that bet on Bitcoin and commercializing the Bitcoin. So pay attention to the evolution of Bitcoin, because it's also attracting a lot of attention for BlackRock. And finally, if you like this content, please subscribe and give me a thumb up. Thank you. Take care. Bye bye.